All right, folks, welcome back. This is our weekend edition for the ICT Mentorship for the final day of July. This is July 31st, 2020. So we'll be starting another thread for the month of August next Monday. So how about these last few weeks? This entire month of July was pretty awesome. I gave you a day-by-day I guess it would be a prodding, if you will, to keep track of how this entire move here would be expected to trade. And obviously, as I mentioned, the daily uploads are a temporary thing. And I did that to kind of prove for the ones that are in here. I mean, I know it sounds silly for anyone that actually joined here and is sitting in the mentorship. Obviously you bleed enough to join. But I wanted to make sure you saw what you will eventually be seeing through experience being here and doing it daily, practicing daily. You do not need me, as much as it probably feels really good for me to point to things and it happens every day. You don't need that. But because we had a pretty rough month in June with a lot of the technical stuff going on, I felt that it was better for me to give you a little bit more value and also walk you through one of the quarterly shift moves that we were outlining here. So I don't want you to be discouraged. I don't want you to be depressed. Okay, but I think next week will be the last week we do the daily uploads. As I mentioned, it'll probably be ending the second week of August. So if we get into another quarterly move that makes sense, I might go back into doing the daily uploads for the short time that would be required to watch the next quarterly move. But we've already moved a lot. We hit a lot of targets, as you'll see today, and it's basically a mature move. I'm not stating that we've made the high, but it certainly is something that we want to be relaxed now. We don't want to try to go in here and start trying to reach for aggressive moves, because typically August isn't that type of month. And unless something obviously comes out of nowhere in terms of the virus, upheaval, that type of stuff, or another swan event that I don't really see coming, we're probably just going to start to range and maybe even retrace some. So it makes it not a one-sided market. We go back to short-term trading, whereas this was potentially position trading, swing trading, and then day trading all in this with one-sided bias to the upside. Now we return back to scalping. Okay, so it's really difficult for new students to make that transition. When I say these types of things, many times you don't want to hear that, so that you have selective hearing and you think, well, I'm just going to continuously try to ride this thing higher. Even though it could potentially still trade the 120 or higher, I am not going to co-sign that going into the weekend, because we have done really well. We've covered a lot. It's moved over 1,000 pips, and it's just time to relax. Okay, I hate to say it like that, but it's time to relax. So when we go back to the 2 times a week, the Wednesday and the weekend edition, the videos will be about an hour each, maybe a little bit more in some instances. But I'm going to include a little bit more teaching, because we're getting close to the end of this year, even though it doesn't feel like it yet. But we have very little time in terms of the end of this year. We have 4 months, basically. And you're going to be surprised how fast they go. So I need to cover a lot of material between now and the end of next year, where my goal is that's all the content for mentorship. Now, do not freak out. Do not think that, oh, that's it, the website's going to go down, I'm not going to do weekly reviews, and that's not what I'm saying, okay? It just means that my measure of delivery is going to dial back, obviously. And we're going to do one weekly review. While that may sound a little depressing, it may sound anticlimactic, you're going to learn a lot of things in the coming 14, 15 months or so. And you'll be able to apply a lot of the things independently. And that's what you joined for. That's what you signed up for. And I'm going to give you my view on Friday nights at the end of next year. But we still will obviously do Wednesday midweek reviews and weekend edition reviews and teachings between now and then. If we see quarterly moves, I might go. I'm not making any promises on this. Okay, just like you didn't expect me to do this recently with these daily uploads. I don't want you feeling like I'm making a promise that I'm going to do this all the time. I felt the need to repay your patience and your trust while we worked out the technical glitches in the new server, and I feel that I've done an adequate, I guess, repayment for that. Okay, so if I haven't, please don't send me an email, because that's going to just upset me. But I think, over 1,000 pips, focusing on one pair, euro dollar, and the dollar being, perfect to script. It's hard to argue with that, folks. So again, I don't want to build a codependency here. I don't want that at all. And a lot of you have been emailing me, sharing a lot of feedback in terms of you appreciate what you're seeing, what we're doing, but that was not promised to you when you first signed up. Okay, but I mentioned today on Twitter, and yes, I'm getting all the jawboning out of the way right now, but there isn't no tinfoil hat discussion, so you can relax. But I'm making a contrast between, if you watch the videos in, I guess, the first 3 or 4 months of the mentorship, I was sitting in live sessions and I was going over the things that you're going to do, and it's going to feel like you're not doing anything. It's going to feel like it's not constructive, and that's a normal feeling. But the observations that you make, they're going to be important over time. When you look at what we've been covering by day here, using a higher time frame and then calling the market to where these levels are trading at now, it's a stark contrast to what the first group did. I had a pretty respectable group. The first group that came in was almost 1,000 people. So I had a pretty respectable group. It wasn't 1,000 people. It was a little under, I think it was 865 people, if my memory serves me correct, the first mentorship group. And I lost around, I guess, 200 and maybe 30 or so, something like that. And the majority of them didn't really state why they left, but there are some on the internet that jawbone and give their reasons why, because they said that I sucked at trading and the live sessions proved it, and they completely missed the point of the live sessions. This whole mentorship from month 1 all the way up to present was to walk you through what would be reasonable in terms of expectation, how long it takes to get into a groove. And I did a lot of pantomiming throughout this. It may not feel like it, but it has been my goal to try to make it as close to what I think is realistic, from starting in the beginning and then working with a few things and then staying with a small set of tools and applications from the entire core content. I don't apply everything, but you can see how powerful it is when you just focus on the things that work at the right time. That's what these weekly reviews do. And I'm not going to be able to do the standard deviations of the central bank dealers range, the flout, and Asian range deviations, and call the daily highs and lows every single time we sit down and do a session. I'm not going to do that. Okay, because number one, we still have people in here that are going to think that this is a signal service, and they're going to do things and harm themselves, and I don't want that on my conscience. Okay, so While I can educate you and show you how it's done conceptually, it's still up to you to do it. Now, the same thing that you see me doing here with a daily chart and calling the moves and where the reactions are going to occur and where the setup's going to occur, where the next level of accumulation and then expansion to go into distribution cycle, that's the same thing you do on lower time frames. There's no difference in it. It's just you're working with a longer time frame in chart. It just requires more time for that candle to paint. So where does that leave us? Well, it leaves us in an exciting time because we're going to be able to get into the really good stuff. And now make sure you understand what I'm about to say here. Charter members are going to start seeing the good stuff. So it's important that you, as the core content members, in other words, the ones that are making monthly payments right now, when you get to charter member, you don't make any payments, but there is where those lessons are going to start populating. So I have a lot of things I got to cover. I have to put those in that category, and you all have plenty to work with the weekly reviews, midweek reviews, and your core content. So there's no fast tracking. I'm not giving you the advanced stuff because you haven't completed all of the core content, and you need that to understand, especially the lessons I'm getting ready to share in the charter members. So over the coming months, the charter level area of the membership is going to start beefing up. And it's important that you remember that when I introduce something new, charter members, it's not an invitation for you to blast my email because I'm still way backlogged. I have so many emails. I'm not certain I'm honestly going to be able to get to all of them because it's just ridiculous now. I got over 23,000 emails, and I can't make a dent in it. As soon as I think I've done well by knocking off 150 to 200 in a day, they're replenished with 100 more than I just did. So it's at some point you all are going to have to just simply experience a greater level of trust, okay? And just realize that the majority of what you're asking, and that's really what a lot of these questions really are when I go through them, it's things that you're going to cover in later content. And for the charter members, you're looking for things that aren't expected to be delivered yet. You're looking for advanced lessons in some of the price action models. Not all of the price action models are intended to have advanced lessons. And as you'll see when we round out the rest of this year, you'll have all of the trading plans, and you'll see how, well, hopefully that's the goal, is for you to go back and look at how all of them dovetailed together. And I did these 12 price action models in charter level to kind of like capsulate the way I digest the marketplace. And if I were asked by myself, okay, like if the younger version of me were to ask who I am and right now in my maturity as a trader, if the younger me would ask, how are you trading in the future and how do you internalize the marketplace? That's the avenue or approach I used when designing those 12 models. So the reason why I did them like that and created them in such a way and in the order that I did is because all of them work together collectively. And if you understand all of them, you can sit down in any market environment, and find a trade every single day. Now, let me rephrase that so that way you understand what I'm saying. If you understand all of them and you're very fluent with all of them, you will be able to find a trade every single day. Now, it's going to take years and years and years and years to get very proficient with all of them. And you may never get to it. And it's not a failure. It's not a failure on my part. It's not a failure on your part. The idea is for you to find what you're most likely suited for with your personality. Because some of the models aren't going to mean anything to you. They're like, oh, well, you know, this was meh. This one was meh. And then all of a sudden you're going to get to one of them that says, wow, this is the one. And some of you may not agree. When you get in the charter members, you'll be able to talk with other members in your group. And when that happens, you'll be able to see what their interests are. And don't read into their interest and think, well, did I do this wrong? maybe I should be looking at that model more because I really liked model number 4, okay, or model number 3. And if you start listening to other people, the same thing that would happen in social media, you let other people influence your decision making and or where your attention should lie. Let your personality and your interest dictate where you go in those price action models. Okay, so the charter members are still swimming around in content. None of them have it all figured out. They're advanced because they have a lot more content and they understand a lot of the things that I'm showing you in these weekend and weekly reviews, bit more than you would as a core content member, because they have everything behind them and they can see what I'm pointing to. Oh yeah, I can see how that works. You're in the mode of discovery still, and I'm pointing things out. So it feels a little confusing. Whereas the charter members right now, they can say, wow, he's really putting this stuff together and it's working like clockwork. Whereas you're just probably saying, wow, it's neat that he's able to do that, but I'm confused as to what he did to get to that analysis, because I'm not fully outlining everything that I'm using to come to that conclusion where the market's going to go. And it's not being surreptitious. It's not holding things back, because the charter members, if I'm holding anything back, the charter members will blast me right now on Twitter and say, yeah, he's not teaching you this. Okay. They understand what I'm referring to. They can see it because they have more content behind them. You are learning things through the core content all at different various months. You're all mainly in month 3 right now, or transitioning from 2 to 3 while we're in this payment cycle, and or up to the 12th month getting ready to become charter members. So you're in core content, but you haven't seen anything in the charter member level. And there's a lot of things in that level of membership that it's going to require a lot of work. It's not like everything becomes easy. It becomes a lot harder because you have to do a lot of practice, study, research, and you're discovering where you're going to bloom as a trader. That's the hard part. This is when you become a charter member. That's when the real work happens. You think it's a lot of work right now, especially when you get to month 5, because it's a lot of content. You're not trying to remember everything. It's impossible for you to remember. That's why I tell you all the time, go through it again multiple times. If you've gone through your core content month, go back through it again. You want it to become second nature to you. Like you know what I'm going to say before I say it. You understand what it is I'm showing you on the chart, and you can see it happening in your own charts. You may not see it before it forms, but you can identify after it happens. And that means you're becoming more familiar with it. And over time, you're going to grow in your understanding about what it is that I'm doing. And then more lessons will unlock more understanding. And then all of a sudden, one of these days, you're listening to a recording, you're going to hear me say something that's going to click. And everything falls into place. And you're going to discover at that moment, that's that aha moment. Everyone has it here. Some of them are still waiting for it. And yes, some of the members from the 2016 group, not every one of those members are killing it right now. They're not. I'm 100% honest. I'm 100% transparent. Some of them are still struggling with what they want to do. Some of them still are struggling with daily bias, even though I believe that I've done an exceptional job in terms of determining and teaching how to find that daily bias. It's not an everyday bias, but it's a bias that you can derive by looking at institutional order flow. But I can go on and on and on, obviously, but I wanted to make sure that we close this month with a sober reflection on, number one, what I was doing this month. I was showing you how to work with a quarterly shift move, how to focus on one pair, how to focus on a pair that's going to outperform. It's done so. Euro has done exceptionally well. It's done really, what's that, like 1,100 pips or so? Yeah, it's like almost 1,200 pips or so from where we were watching it in here. So you can break that 1,000 pip swing down into short-term trades, swing trades, one shot, one kill, day trades, and then every single day, multiple scalps, but trading in one direction. The ideal would be looking for longs. That's the high probability setups. So this weekend, if you want homework, okay, what you want to do is you want to go back through every single one of these daily candles, every single one of them, and right away by me telling you that, if you just did this, you're going to need to change that attitude, okay? Because this is the stuff that makes you unbelievably profitable. You have to like this kind of stuff. You got to be able to go into these charts and say, okay, I'm looking for these signatures that repeat over and over again. Is it coming back for a imbalance? Is it coming back for stops? That's the only thing you're going to be focusing on. Well, let me rephrase that. You're looking at bullish order blocks. You want to look for fair value gaps that are lower than the marketplace, that are in a discount market. And you're looking for sell stops, runs on either a single low or equal lows, or relative equal lows. And when it does that at time of day, New York kill zone, London kill zone, Asian kill zone, when you see that overlap, study how many setups are there and how many pips it moved, how many pips in drawdown you would have suffered, and use the worst case scenario entries. That will start building in realistic expectations, because if you don't do those things, it's real easy to look at a chart and say, yeah, I was, like I said, I don't know what recording it was, but it was one day this week I was talking about, because I'm a little bit tired now. I mentioned how it's easy to look at something, and if you're not totally engaged, to look at it later on once it's moved and attribute that as I was right, or you were right in a sense. And that builds the wrong mentality about your analysis skill set. You don't want to sugarcoat it. You want to be, I guess, void of all emotion. And the only way you do that is stop trying to be right and wrong. Just be in sync. That's all you're trying to be. You're trying to be in sync with order flow. Notice, dude, you're not right. You're not right. If you're getting in sync with the order flow, is that right? You being right? No. That's you getting in sync with the market. The market's always right. But if you are attributing every transaction as a right or wrong transaction, you're doing it wrong. You're feeding your psychology in the school of thought around your trades as toxic as you can possibly make it. And you don't want to have that. So to avoid all those things, you want to focus on the transactions in an unemotional transaction that doesn't mean anything to you on the outcome. And if you do that, you systematically desensitize yourself to the result, because you're going to take a loss, you're going to miss moves, you're going to miss trades. And I want you to see how many times the setups that you think you understand thus far at your level of understanding, how many times do you see failure in the setups? Now, obviously you have the benefit of hindsight, but I want you to really take the time. If it can't be done this weekend, maybe you have plans or whatever, do it this week. Okay, sometime over the week, or maybe break it up over a couple days if it's required to do so like that. But what you're doing is you're breaking it down to a 5-minute chart, 15-minute chart, hourly chart, 4-hour chart, daily. Okay, and see how many setups that I've outlined that you understand thus far in your level of mentorship. The concepts that you understand, the things that you think you understand about the entire mentorship, everything that you personally know. And I think you're going to be pleasantly surprised how many opportunities are there. And that was more or less the gist of what I was showing you each day. I was keeping your focus on what? Don't try to sell short. Stay long. Trust the process. Trust the order flow. Let it do its job. And the candles will paint. And all you have to do is either stand aside and wait for one that's more appropriate for you to take, or get in there and hold it and work towards driving up into these higher time frame levels. But you're not going to get there just by watching me do it. It doesn't work that way. Believe me, it does not work that way. And I have 2 sons that are actively trying to learn from me, and they watch me do this. And they are my flesh and blood, okay? And because they watch me, you think they have an advantage because they're my children. They are watching me actually do it live, from entry to stop to management to everything. And it's still not helping them, okay? And it's not because they're daft. It's not because they're uneducated or fools, okay? It just means that it doesn't work that way. You have to do this stuff on your own. You have to study it. You have to find these setups in hindsight and annotate your study journal. I mean, really fill it up with lots of examples. And then and only then does it click, because you're seeing it over and over and over again. You're going through hindsight data and you're annotating the chart with the things that I teach you. And that dressing of the chart that you're doing, you are finding what it is in these price action models that repeats over and over and over again. But you're not looking for it because you're not dressing your charts up appropriately. You're looking at a naked chart with no annotations whatsoever. I try to keep the annotations light, so that way you focus on the things I'm drawing your attention to. Where's the market going? There's all kinds of things in here that you should have on your chart that are salient, but I don't want to put levels that are salient to me, but I know that I'm not going to need those levels until other things take place. You need to figure out what style of trader you're going to be. And that's why I'm saying this is very difficult. That's why trading itself isn't for everyone. This mentorship isn't for everyone, because it takes a lot of work. And anyone in here, okay, that's, gone through any of the lessons, you understand now what it means to be not easy. It's not easy. You have to do a lot of work. But that level of work is going to put you in a position where you're going to be able to do whatever you want. If you want to travel, you'll have the means to do so. You want to quit your job, you'll have the means to do so. You want to build an empire, you'll have everything at your disposal to start doing that. If you want to live a modest, eke out a mundane life, just replace your job's income and just not have to worry about anything. Why anybody would want to do that, I don't know. But hey, we're covering all bases here. You can do this, but you have to do it the way I'm teaching you. There is no shortcut to it. There is no magic bullet. There is no fast track approach. The only way you get this is by burning it into your psyche. Like, you have to constantly train your eyes to see it. But you're never going to forget it. It's like riding a bike. Once you get it, nothing takes it away, unless you lose your sight, God forbid. But as long as you can see visually what a chart's showing, forget about it. Once you got it, you can walk into any asset class. Well, let me rephrase that. Any asset class but crypto. I know a lot of this stuff works in crypto, and I just recently called 11,000 in Bitcoin, but big deal. I was wrong a couple times prior to that, because it should have went up in my opinion, and it just stayed in a tighter consolidation. But barring crypto, in my own view, that every other asset class will fall victim to you. And that is empowerment. Like, that should really, really get you excited, because that means you are a master of yourself and of price action. You're not the master of the markets. Nobody's the master of the markets. There's no god of Forex. There's no god of price action. None of that stuff. There's no kings, okay? But you will be a master of yourself. You'll be in control of your decision-making skills. You'll be in control of your psychological views. You won't be at the whim of your emotions and feeling like, oh, it's already moved a little bit, let me get in shape. You won't need to do that. You won't feel any interest to do that, because you'll understand, okay, I missed this one. I sat down, chart too late, or it happened yesterday. I'm going to sit and wait. And then you're going to look for a setup to either get you in sync with it without chasing it as it's screaming higher, or you're going to wait for something else. And you're going to be content doing that. Whereas right now, you probably don't feel those things. And it sounds like there's no way I'm going to feel like that. But it does. It happens. It happens just like that. You probably see once in a while some of my students, they pop up on my Twitter feed and say, I've done this, and I've messed up in the beginning. I went too fast. I rushed through the lessons, and now I'm going back through, and I'm learning way more because I'm taking my time and I'm enjoying it. Think about that. Everyone that says they're really getting it, they're the ones that are going back again. They're not one time through the mentorship. There's just no way for you to absorb all that information. There's no way. No one is retaining that one time through. You're not going to get it all 10 times going through. You're not. It's too much information. But you don't need all of that to do exceptionally well. So I want you to understand, as we eventually, after this week coming up, go back to our normal delivery schedule of a Wednesday, midweek, and a weekend edition, that It's normal for that to happen. And also, you'll probably also feel why I don't do it. Because it's going to feel like, wow, I'm only getting 8 videos plus the core content. I'm only getting 8 videos a month. What's up with this? Well, charter members, they get 9 because they get the price action model trading plan. And it's going to feel like, man, I'm paying too much money. I'm not getting the value I thought I was getting, because you've seen all of this daily uploads. And you're going to taste what it feels like. Because if I sat here every single day and I held your hand and said, okay, we're going to watch the euro go down to this level, it's going to be a buy, and you would hypothetically put a stop here, and this will be your first target to scale off here, 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 and this is where the daily high is going to be. If I did that, not only will it be a disservice to you, but it's going to create such a level of codependence. Number one, you're not going to work hard enough in your own study, because you're going to be like, I don't need to, because he's basically doing everything for me. And that's not what you signed up for. You signed up to learn how to do it yourself. Because, like it or not, folks, there's going to be a day, okay, that I'm either going to be physically unable to do this, and tomorrow is not promised to no one. God forbid I check out here. I don't hope I do, but if something could happen and I may not be around, or something happens in my personal life that says, okay, it's time, like I have to bring this to an end. If you're always expecting me to point to everything and you only feel confident because I'm doing it, have you really learned how to trade? Not if you're expecting to do that. And that's what I'm teaching you. I'm teaching you how to be independent. And it feels scary. It feels uncertain. It feels like you're not learning. It feels like you're confused. I'm not figuring out what's going on. I had a member tweet to me today, month number 6, and I'm just letting you know, I don't know what I'm doing. And guess what? That's normal. It's absolutely normal. It's normal for you to be at a charter level and not know what you're doing. That's when you start really discovering yourself at charter level, because you'll have all the market price action models, rather, and you'll have the trading plans, and you can go in there and look at them, and they're presented in such a way that if you have really studied all the core content, everything will come to your memory, and you'll say, okay, yeah, this makes sense. But if you look at a model and it doesn't make sense to you, it doesn't mean the model sucks. It doesn't mean it's not profitable. It doesn't mean I can't go in here and blow the doors off anybody with any one of those models. It just means that it doesn't resonate with you. But once you understand the one that you do like and you get proficient with it, you want to go back and look at another model. And all of a sudden, over time, how much time? I don't know how much time it's going to be. But I'm taking you through the closest development timeline that I had when my first trading loss to in my 6th year, where I felt absolutely comfortable with what I was doing. This entire mentorship has been designed all around my journals, my personal journals, my discovery of everything. You are learning them in the actual order that I learned it. There's nothing out of order. This is exactly like you were going through the process and reliving the early days of Inner Circle Trader. Okay, or Trader Ox is who I was back then. Okay, Trader OX or Oxatixo. Okay, those were my usernames on America Online. And the only reason why I had 2 is because I couldn't afford America Online and I had to restart it, and someone else took that name over. So I was Trader Ox. But anyway, I gave you a lot of jawbone in here, and I just wanted to make sure that we are all on the same page. And this coming week will be the last week we do for a while. I'm not promising we're going to do it anytime soon, but I felt that I owed you all something for the extra measure of patience that you certainly extended me and my family and my staff while we got all of these things sorted out. So with all that, let's get into this and wrap this video up. I don't want to spend too much more time bloviating. All right, so we have the dollar index on the left-hand side. Let's maximize this. All right, so here is the dollar in daily, and just how beautiful is that? SMT divergence again with the euro. Euro made a higher low, and we have a higher high here, so that's cracking correlation. We've mentioned that, and it's just a real nice distribution. The other day, I gave you the fair value gap premium level and discount level, and you're probably saying, what is this level here? You're cherry picking now. In my haste yesterday, I forgot to give you the rejection block, and at least I don't recall talking about it, and it didn't appear on my chart when I opened up the platform to discuss anything. But the rejection block is this closing price down here. So I don't remember seeing it. I haven't watched the video, but I'm almost certain I didn't talk about it. But it's still in the core content. You understand this is how I teach it. It's not like I just pulled something new out of the thin air. But the rejection block is the lowest closing price in a swing low, or the highest closing price in a swing high. The algorithm will look to that price it'll trade to, or maybe just below it by a little bit, and then if it's going to reject, you'll see it right away. And that closing price on this candle comes in at 92.55. Okay, 92.55. And you can see here, today's low comes in exactly at 92.55. Think about that. That's perfect. That's perfect. And that's theory that you've already learned. So it's not support resistance. It's not supply and demand. It's not Elliott wave. It's not all this other stuff that's out there. Okay. This is the truth of how price books. And it repeats all the time. We closed the entire fair value gap. And then once we breached the discount level of it, we went right down to the rejection block. And look what happened after that. Beautiful reaction, isn't it? So if we drop into an hourly chart, we're going to consolidate in this area. I don't see a complete reversal. Okay, that's my expectations on the daily chart. So that way we can drop down into an hourly chart now. All right, so we have some liquidity right here. Your eye should jump to that as well. If not, now you know. So there's some buy side liquidity there around that 93.80 level. Price hits the rejection block and then hammers it. All of this consolidation, break, retest of the original consolidation, distribution, redistribution, smart money reversal, low risk buy, reaccumulation, and we should see price trade above here. But more specifically, on the near term, it's right above here, this high here. All right, we're going to drop down to a 15-minute time frame. Okay, so you can see it hit the rejection block here. Price comes up. Fair value gap. Displacement. This right here. What's the low on that candle? 92.79. So institutional order flow says if you're bullish, I'm not saying you would be trying to capture the low here, but this is what you're going to do in hindsight now. You're going to go back through your charts and do these types of things. Or you should be doing it, because if you're not doing that, you're not participating in the mentorship the way you're supposed to be. That's why you're supposed to have a study journal. And you should have lots of blank study journals ready to fill up, because you should be filling up pages of them. Every single week there should be an enormous amount of information that you have gleaned from a 5-minute chart, 15-minute chart, hourly chart, 4-hour chart, daily chart, weekly chart, monthly chart, all those things. That's why I tell you to focus on 1 or 2 pairs, because there's absolutely no way you're going to learn how to do this across 28 pairs. You're not. So don't do it. Don't waste your time. But the institutional order flow entry technique, so now it's a mouthful. The low here is 92.79. The rules I gave you were, if we trade down to that level, again, this candle's low, because here's the fair value gap. All it needs to do is touch that candle's low. If it touches that or trades just below it, that's an entry to go long. Now you take that level there and you add the spread to it. What's the low on this candle here? 92.79. What's the low on this candle? 92.79. So it's the same thing as that candle right there, 92.79. That's exactly what I teach you. That's institutional order flow entry drill. That's not liquidity voids a la Chris Laurie. Okay? I had a guy on, I had 2 guys on Instagram tell me yesterday, oh, you just stole from Chris Laurie. Liquidity voids, okay, is just a new name for what is a price vacuum. This is a buy vacuum. Okay, all this right here is a buy vacuum. That means it creates one big huge up candle. It's not that it's a lot, but in terms of the scope of the size of the candles over here, it's just a large candle, okay? And it's on its close. So this big beefy candle that's an up close candle, that's a buy vacuum. That means there was only buying in there. And there's a vacuum of any real selling taking place. So that's why they call it a buy vacuum, okay? Or price vacuum. They existed before my birth, okay? They existed, man, like way back in the day, okay? When floor traders were trading, okay, this was actually a term that the floor traders would use. How do I know that? Because I was actually trained by a floor trader that traded the S&P markets, okay? So, and I'm not talking about George Angel. Even though I mentioned him as one of the resources early on, I have been trained by a floor trader from the Chicago Mercantile Exchange. So I know a lot of tape reading skills, and a lot of that stuff makes its way into my commentary. And what I see in price resonates with futures traders because they can see some of the things I'm doing, but then there's a disconnect later on. But what I'm doing is remembering the things that I learned from all of the mentors I had, and obviously the two gentlemen that exposed me to how the markets actually book from a central bank level. All these things came together. But this technique here, the institutional order flow entry drill, that was one of those things that was an illumination, okay, from all those things that I would lose on, all those things that I would expect books to teach me and then replicate that with retail logic. All those things, I turned it upside down. Okay, so what I mean by that is, like, see how the gap here, and it trades up and fills the gap. So natural tendency is what? It's filled the gap, because it's a real gap. Then it should drop lower. Well, it's going to drop lower to pick up this right here, that low. And that became the first epiphany I had with trying to capture entry techniques that were unorthodox, because you're never going to find this in any nothing. There's no other person out there that's turning pages in a book and finding that there. No one teaches that. You learned that from me, and it obviously is going to be spread around the world, okay, and renamed with whatever else they want to come up with. But there are dozens of these types of entry techniques. And right away, you're always thinking, okay, I'm going to learn dozens more. No, you're not. You only need what I've already shown you. I'm going to blend things together where it brings a lot of clarity, because a lot of this stuff, it becomes so many, you're going to have like a whole entire arsenal, and you're not going to know which weapon to pick up, or to take it away from the action theme, you're not going to know which paintbrush to pick up to paint on this canvas of yours each week, because you'll have so many choices. And it's not my interest really, or goal, to inundate you with every toy and mechanism that I have, because like I said, some of the things I'm not really allowed to teach, and I get you very, very, very close to what it is that you should see. And you will see it once you get it all in front of you and pointing to certain things. But when that occurs, you won't care, really. You won't care the things that I can't teach, because there are things that I cannot. I just can't legally do it. So if that's bothering you, trust me when I tell you this. Once you have everything understood, even at the point what I've shared so far, and you're very efficient with using it, you aren't going to care, because you're going to be consistent. You're going to be able to take what you want from the marketplace. You'll be able to harvest whatever it is that you want, and you'll be able to sit down and frame a model based on whatever approach you want to do. That is empowerment. That's what I'm promising. That's what you're going to get. That's what I'm delivering. But you have to get it in modular pieces. But you can see the institutional order flow is perfect, right to the pip. Perfect delivery. Then it runs. it creates a optimal trade entry, which trades into the fair value gap here. Explosive price move, back above the fair value gap, and the premium end of it. Look how the bodies of the candle respect that. Yes, we wick through it, but look at the bodies. I always find that interesting because it's so telling about what this algorithm is doing. It retrades back down again, bullish order block, expansion again, sends it up into the imbalance right here, and relative equal highs. We spike up into that, come back down, consequent encroachment of this BISI, buy side imbalance, sell side inefficiency, and it rallies one more time above the bodies of the candles, one more time up into this area here. And what's this high here relative to this one? This is your signature for a low resistance liquidity run. So it could potentially still run above these highs and maybe spread above to this one. Okay, so we have liquidity pooling around again that 93.75, 93.80 level. Just for completeness sake, not that I'm going to do this on every time frame, I want you to see the 5-minute chart. Rejection block, optimal trade entry, fair value gap, bullish order block, rallies. Picks up orders around the discount end of the fair value gap, small little fair value gap in here, and this candle's low comes in at 92.79. Okay, institutional order flow, there, 92.79. Then it runs. Another optimal trade entry, runs. Fair value gap, bullish order block, optimal trade entry, consolidates around the premium level on the fair value gap, and then displacement. The only thing I see here that's a little unnerving, you probably already saw it too and I haven't mentioned it yet, but this clear trend line thing that's going on here. So we could come back down, upset some of the liquidity in here, maybe into here, maybe even get so far as to go down in here, and then if we take out the low here, I don't think that we're going to drop all that much right away. It might bang around in the range that we have outlined from the hourly chart to what we saw here as an intraday low today, and just consolidate and run around inside that and take short-term volatility runs to liquidity on both sides, buy side and sell side. So basically, I'm expecting some choppy price action, nothing one directional. Now, obviously, if we start the week doing something else on Sunday and then trade on Monday, giving me more insight, I'll have a better opinion about what may transpire. But going into the new week, I'm expecting just range-bound chop and just consolidation, with a willingness to see it continue. Again, I'm not trying to pick the bottom in the dollar, not trying to pick the top in the foreign currencies, but I'm expecting consolidation and chop. That's just the easiest way to say it. All right, and let's go over to euro dollar. Maximize this puppy. All right, so we have, again, 1,100 pips or so in terms of price movement. What we have here is the fair value gap, premium and discount level. Consequent encroachment is the midpoint of that fair value gap, and then we have the weekly high. If you scrub back over here, Michael, you can see that this is the old high, and there's our SIBI, sell side imbalance, buy side inefficiency, or fair value gap. This candle's low, this candle's high frames the fair value gap. Consequent encroachment is right in the middle, and you can see that we did in fact trade rather handsomely to those levels here. And then once the dollar hit its rejection block and this traded into its consequent encroachment, then we have a nice retracement lower on a TGIF basis. Now, what's TGIF? Thank God it's Friday. I know some of you are atheists in here, and I'm not trying to offend you, but it's just an expression I use to frame an idea that we have been going up all week, and the opposite end of the range is typically when it's bullish. It makes the high of the week on Thursday on New York Open or Friday, and then we trade back down into the weekly range, then close off the high of the week in a bullish weekly range. So it's like the weekly power 3. But Euro has had a really nice run in here. We had an optimal trade entry there, rallied up, and just it really delivered really nicely this week. I mean, if you just go back and look at what we were expecting each week and where it should reach for, staying on one side of the marketplace, it just keeps things very, very focused. And that's what I tried to do this month. I wanted to keep your focus on one pair to show you the benefits of doing that. And some of you still were dabbling in other currency pairs, and that's fine. That's normal, like a kid in a candy store. But to really understand what you're doing here, you really want to focus in on one pair. Now, it's good to have a correlated pair like we do with British pound versus US dollar and euro versus the US dollar, and then using the dollar index as a barometer for our overall market macro view for bullishness or bearishness, like a barometer. But you need to determine what you're going to be focusing on that day or that week in terms of the euro or cable, and try not to go back and forth between them, because you're going to see what you're expected to learn here by focusing in on one pair. And clearly, even though this has moved a lot, okay, you can still find what you require on a weekly basis if you just look for one pair and study one pair. And euro, up until recently, has been a quiet pair, and it didn't stay quiet, did it? Sprung to life, almost 1,200 pips. That's amazing. That's good stuff. But it won't stay one-sided. It's going to start going back and forth again. And then when we get in these later months in the year, we're probably going to start seeing some pretty savage volatility. And I'm excited to see it, but I'm not going to be in there diving in with 50 lots and 100 lots. Okay, I'm respecting the level of uncertainty that's still available to us. Okay, and I'm not trying to blow out just because I'm trying to make a whole lot. All right, so everything expected on this pair is choppy. I want to see it stay. I want to see it stay above here. I don't want it to come down here and get any of this, because if it does, it's going to reach into this. Okay, and that might be this week's objective. It might do that. But to stay bullish, I'd like to see it stay above here, because we have a nice rejection in here. We took some stops over here, and it just, this would be an intermediate term low. And if they take that out, then we're going to go here, and then I'll have to see what we do, how we trade at this level. Do we get to it and reject and go back higher, or do we go through it and come back in? It's just a matter of how we trade. But right now, to maintain the bullishness on euro, it needs to stay above here. And then finally drop it into the 15-minute time frame. Beautiful market maker sell model. Consolidation. Breaks the consolidation, comes back, retests, and reaccumulation. Reaccumulation. Another level of reaccumulation. Smart money reversal. Low risk sell. Distribution. Multiple levels of redistribution in here, but it's basically the same area. And then sells off. And then we have consequent encroachment here on the SIBI, sell side imbalance, sell side inefficiency. And then we should, again, if we break down below this fair value gap, we're going to clear the sell side liquidity below here and maybe even below here. And that takes us into that fair value gap I showed you on the hourly chart. All right, so here's the British pound versus the US dollar. This is our daily chart. I still favor this running out, and it could still happen with dollar in consolidation. Like they might spike cable up here, and I think that would be reasonable, because for it to come back just to this level here and stop here, just doesn't make any sense. Even though we do have consequent encroachment, which is the midpoint of the gap, which is this wick. Okay, and I'm going to say that again because some of you are new, and it's going to be like, well, I don't understand what that means. How could that be a gap? It's a wick. Every wick and every tail, okay, is a gap to me. The market is reaching for liquidity there, and it creates a low volume delivery. The midpoint of that, in other words, the high to the close on this bullish candle, that's your range. And then you split that in half, and 50% of that range, that's consequent encroachment. That's basically what it hit here. That's your weekly high. The rejection block here on this candle was an objective, just like the fair value gap was here. Every single one of these levels, even the order block mean threshold, was a potential level as well. So if you were long in here, expecting price to go up as we were expecting, even though I've refrained from trading cable, we were still calling this puppy higher. Every time we got to one of these levels and the consequent encouragement in here, they're all candidates. Now, obviously, you can't take every single one of these levels as a partial exit. I understand that. But you need to, over time, develop enough experience to say, okay, I'm going to take off this much at this level. And are you going to do something at consequent encouragement? I wouldn't, because you have the premium level that you could contend for. And if it gets to that, you might want to take something off there. And then you got to consider, do you want to take something off the mean threshold? Then you have the rejection block, which makes more sense than the reaching into the mean threshold. Because if it's going to go, because this is a rather small bodied candle. So to take the mean threshold of this up close candle as an objective and not take the rejection block, when you've already taken maybe something here on the fair value gap or consequent encroachment of the fair value gap. All these potential targets are up to you to decide. Now, I'm going to do this with the benefit of hindsight, but you also know that I've been calling this over here anyway. Logically, you want to take something off at the easiest low-hanging fruit, which is the discount end of the fair value gap here. Okay, because remember what could happen. It could trade to this candle's high and be what? Institutional order flow entry drill, and they could start to have, a 200-300 pip decline. And even though it might get up here later on, but you have to weather all that. That's not fun. So you want to take something off here. That's the low-hanging fruit exit, first partial. Then take something off at the fair value gap, because it could just go up to that order block and fill in the fair value gap, and then have a several hundred pip correction. I wouldn't be concerned about doing the mean threshold, because we've already had really nice objectives in here with 3. The discount, consequent encroachment, and premium levels of the fair value gap. Not worrying about the order block low, because that's the fair value gap premium level. Then you have the potential mean threshold, which is really close to what you had here. So it's not necessary. But rejection block, absolutely. You want to take something there. And you can see the rejection block here. And then you have the consequent encroachment of that candle's wick. And it trades to it here. And then we give up the ghost for the week and close in on a little bit of a retracement. I still think it's going to go higher. I'm giving enough room to do that and give myself permission to stay long in my thinking. I'm not long in the actual currency, so that way you are aware for disclosure's sake. Hourly, just a beautiful uptrend. I mentioned the other day, I said I'd be interested if we traded above fair value gap, premium level came back down, and we've seen that on the 15-minute time frame. It gives a optimal trade entry and fair value gap just below the premium level, so it comes back in, as I was mentioning. Then it trades up to the rejection block, and the consequent encroachment of the wick. Look at that delivery. Look at the bodies. You don't think there's anything behind all this stuff? I'm not making it up, folks. It's the same stuff you learn in the core content. I like to see it stay above these 2 lows, because why? We've had a run below this low, and then it sent it higher. We want to see this fair value gap and maybe consequent encroachment defend any downside. So that's my thinking. That's what I would like to see that. Let's say it that way. And finally, on a 15-minute time frame, there's our fair value gap, optimal trade entry, and premium of the fair value gap, and then sent it higher. Look how it worked the rejection block. See that? That's the rejection block on the daily chart. Back and forth, back and forth. Sell side liquidity, punched through it, picked up orders, even over here, fair value gap, then sends it above the relative equal highs up to consequent encroachment of that daily candle's wick. And then there you go. Otherwise, there's nothing up here. Go back and look at the chart. There's no reason for that to turn right there. But now you know. So anyway, until I talk to you on Monday, enjoy your weekend, relax, try to spend time with your family, do the suggested homework assignment I gave you in here, and just really enjoy this past month in July. We did a really nice job of working together and outlining what was going to most likely occur in price, and it's delivered handsomely. So until I talk to you on Monday, I wish you good luck and good trading.